Hello and welcome to another episode of Earth911, Sustainability in Your Ear. Mitch Ratcliffe, and we are back with another innovator interview. This time we're going to be talking with Doug Heske. He's the CEO of Newday Impact Investing. He's back to talk with us about the ins and outs of sustainable and socially responsible investing. Doug's also walked us through the basics of investing for lower greenhouse gas emissions on previous shows, renewable energy, and how the recent United Nations Climate Change Conference, or COP26, changed the prospects for ESG investing. Today, we're going to look at clean water, keeping water clean, recycling water, and treating and reusing wastewater. Newday Impact offers a wide range of managed portfolios that take the trouble out of your decision-making and offers, in particular, a clean water fund that you can invest in. But today, we're going to talk about some individual stocks. Evoqua Water Technologies, that's ticker symbol AQUA. Watts Water Technologies Incorporated, WTS is the ticker symbol. Middlesex Water Company, which is MSEX. And Waters Corporation, WAT. Finally, we're going to close out with Crystal Clean, which trades under the symbol HCCI. Now, please do your own research before doing any investing. We're talking about these stocks, but there is a lot of complexity involved in any decision. Welcome to the show, Doug. How are you today?
I am great, Mitch. Great to speak with you again.
Well, it's good to have you back. And by the way, if you want to follow along on Newday Impact Investing, check out newdayimpact.com. Just before we started this conversation, McKinsey released a new report, U.S. Water Infrastructure, Making Funding Count. And they called out some really important things that I wanted to just list out here and then ask you for your impression about. They say that today, 14 to 18% of the total daily water, potable water in the United States, is lost to leaks, and that we're going to have to replace 20,000 miles of pipe per year by 2035, and we're only replacing between 4,000 and 5,000 miles of pipe today. And in 2020, we were $40 billion short. So this is the question, Doug. How should we be thinking about investing in water utilities, which is a largely local business model, to achieve these global changes that we want in efficiency and conservation? What's the right way to think about clean water investing is the simple question.
Mitch, that's a great question. And I've been reflecting a lot, as we have as an organization, on water issues, because we are right in the middle of not a pending drought, but we're right in the middle of one. And this may be a very long one as well. I have really been looking forward to this conversation. When I historically thought about water stocks, I thought boring, but as we will discuss today, there are some really cool things that are going on in this space. Not only are they cool, but the technologies being used by some are really important to the future of humanity. What we know for sure is that the scope of the water business, how we access water, how we use water, how we pay for it, and how it's regulated is going to change dramatically over the coming decade. And as with many other scarce resources, collaboration is going to be really important, especially between industrial and consumers and water producers like utilities. Mm-hmm. So companies are going to need to collaborate with their municipal water utilities to develop more ways to reduce or recycle water. And there's a great example of this right in our own backyard in the San Francisco Bay Area, with the San Francisco Public Utilities Commission and Anchor Brewing Company. Anchor, by working with SFPUC, has developed this super innovative water reuse program that will significantly reduce water usage while having the capacity to recycle 20 million gallons of water annually. This is going to be the largest commercial water use project in the history of San Francisco, which is super exciting. And not only is this a collaboration around supporting the installation and things like that, given the SFPUC's focus, but they've provided $1 million grant to Anchor to help them install the system, mm-hmm. which is actually made by a private organization by the name of Cambrian.
Now, there are 147,000 public water utilities in the United States, which seems almost impossible. And what the 2015 Drinking Water Infrastructure Needs Survey assessment found is that we need $472.6 billion of investment by 2035 to continue providing clean, safe drinking water. Do you see that capital starting to flow?
Yeah, good. That's a massive amount of money, of course. And the great answer is that yes, the capital is flowing. The latest infrastructure bill now includes $111 billion in funding for clean and safe drinking water infrastructure right here in the US. Mm-hmm. But this is only a drop in the bucket for what's needed to support what is a broad range of needs to develop new products and services that include improving the productivity of water treatment and distribution of water-intensive industrial and power processes, and for efficient water usage in ag. But already municipal utilities, private utilities, and a lot of large businesses are spending a ton of money right now each year for human consumption needs and industrial activity, and also with reference to transportation of water through pumps and pipes and treatment plants and things like that. So, this is an infrastructure problem of the greatest need. You look at Flint, Michigan, and, the circumstances that we've had, not just there, but in other cities. This is something that has to be addressed immediately from a health and human services perspective.
So before we jump into the conversation about specific companies, this is the last question that I've been dwelling on as I prepared for this conversation. This doesn't, because of the infrastructure and capital investments required to enter the business that you just described a moment ago, doesn't look like an industry that's going to be disrupted by anybody. Is this something where investors should be looking for established companies that have plenty of connections, or could a startup be successful in this space?
I think that there are going to be opportunities stemming from both areas. So you're correct that, and consequently, the innovation is going to occur from within, from a lot of these big water treatment facilitators, at least regarding centralized water treatment systems. So aging infrastructure and water scarcity are going to demand a total new approach to conservation going forward. So just as an example, in Europe and in the US, the same sewage systems collect residential and commercial wastewater, runoff rainwater, and even melted snow. But other countries, by contrast, like especially in Asia, are collecting different grades of water separately, and consequently can redirect these lower grades for other water uses, things like watering lawns and things like that. So this approach is much more efficient, both financially and from an energy usage standpoint. So there are some really exciting things that are going on an international level. Like even in Hong Kong, their water department is developing systems to use seawater in toilets, right? And this is where growth is really exploding in Asia, in water treatment and infrastructure systems. Like there's a huge amount of capital, especially in areas like China and India, that are getting directed towards the construction of new water treatment facilities. With that being said, in my opinion, there are going to be big opportunities in decentralized water systems. So as an example, there's a great company in Fluence, or called Fluence, based in New York, that manufactures this containerized EcoBox. Think Tesla solar for water. It's affordable and a cost-effective solution to scarce freshwater resources for people in more remote areas that don't have it.
So in this specialized and distributed water distribution and collection and processing environment, there are points of entry for disruptors, but they're going to need to have some good political and financial connections, it sounds like.
Yeah, I think that that's true. Trillions of dollars are going to be spent on technology, equipment, services, and as a result of that, innovation is exploding. It will continue to explode in the space as we try to address this major issues. There are companies already introducing new products, including devices that collect wastewater from sinks to reuse flushing toilets, technology for collecting and reusing condensate from air conditioning systems and things like that as well. And the craziest story that I've heard to date is this concept, you've probably heard about this over in the UAE, of building a man-made mountain to collect what is condensation in an area of the world that is, very short on natural and fresh water.
So, actually, that makes sense. There's an article in the recent this week's edition of Nature about the fact that mountains actually redirect the water flow from the Pacific in the western United States, and they collect the water. So makes sense. But let's jump into the companies that we wanted to talk about today, because it's clear there are many, many opportunities for growth, even within replumbing the house,
Right.
not just the infrastructure. So let's talk about Evoqua. It's Evoqua Water Technologies. They trade about 109 times earning, and they're up 71% over last year in terms of stock value. When we were talking about this prior to the show, you said the company is in excellent capital position. So how are they positioned, and where can they go with the money they have?
Yeah. So, just sort of as a precursor to the discussion about all of these companies, none of them are cheap, or very few of them are cheap right now. And they're trading at higher levels because of, what we've witnessed here in the US and around the world around water scarcity.
Mm-hmm.
So for everybody's benefit, Evoqua offers a wide range of water and wastewater treatment systems and technologies, including emergency water supply solutions. They have operations in the US, Canada, the UK, the Netherlands, and even in Asia. Based on their worldwide operational system, they have more than 170 offices, plants, and factories to handle emergency situations with their service teams. This is a company that sometimes gets identified as a new company, but the roots of it go back actually for around 100 years right now. They were originally a part of Siemens Water Technologies and rebranded the company in 2013 under Evoqua. And then in 2017, they spun out as an IPO. Here in the US, they have an operating footprint that gives them the capability to employ their mobile and emergency water supply solutions and services to a wide array of industrial and muni water treatment clients. About 30% of the US market is actually, or the treatment market in the US is actually controlled by Evoqua. So they are by no means a small organization and have real scale to grow here as well. I do think that they are going to be a beneficiary of the $1.2 trillion infrastructure bill. And they have a lot of other great things going on. Just as an example, they transformed recently one of the largest offerings of service deionization from a model that relied typically on regular service intervals and equipment purchases to the Water One pay-per-use model, in which customers are paying for the quantity and quality of clean water that they need. And I think that this is the direction that a number of these organizations are going to go, which is basically pay as you need or pay as a service.
Well, and again, that's specialized water use. So, for instance, if you're making semiconductors, you need ultra pure water, and this would be one of the ways that you might buy that access to that type of water. Now, why is Evoqua a good bet to continue to deliver the 20% plus earnings per share growth that it has delivered over the past 5 years? Yeah, especially given the fact that it might be at a premium right now due to the pandemic.
Yes, and I think that a lot of these companies that we're going to talk about are going to continue to trade at a premium because they're great organizations operating in a space that's getting a lot of attention right now, and a lot of people see a lot of growth as a result of that. Based upon what we're seeing in their financial statements and latest quarterly results, they have had organic orders increasing into the double-digit level of growth, which is super exciting for us. They also have an incredibly strong management team that has delivered time and time again on their earnings estimates, at least historically speaking. So we're very excited about the company, and we think that they have room to grow from here.
So let's turn to Watts Water Technology. This one trades under the symbol WTS. They've beaten substantially their estimates all year long. Stocks on a huge ride from $120 in April through early November when it reached $212. And the shares are up about 60% year over year. Now that it and a lot of other stocks have fallen back in the past few days, and we're recording on December 1st, after the market corrected 10%, is this a good time to enter Watts?
So Watts is an industrial manufacturer of products that manage the flow of fluids. They have historically been a really strong cash generator and have demonstrated an incredibly disciplined capital deployment strategy for many, many years now. The company delivered really strong results in Q3 as the economic recovery continued to drive demand despite price increases being realized as a result of supply chain disruptions. They've been a very clear beneficiary of the housing boom, and I think should continue to be a beneficiary as the economic recovery continues from here, as long as we don't get into a protracted slowdown associated with the new virus strain. So I think that the U.S. housing market will continue to support above trend growth in single family and multifamily construction, at least for another year or so, if not even longer than that. So we are very excited about their prospects. I do believe that there is more room here given the acceleration of adoption of smart water technologies, which is one of the most interesting things about their business.
Now, they're also an international player and focus overseas on water conservation and management. Are they sitting on new technology that could be transformative for the business globally?
I think generally, the area that consumers want to focus on is their smart water technology. I think that this is, especially as we go through additional concerns regarding water scarcity, is something that's going to be mandated not just here in the U.S., but in Europe as well. So, and it won't be just Watts, but there'll be other players in the space that take advantage of that.
As we're talking, it occurs to me that one of the technologies that I did not see any of these companies engaged with in a meaningful way is desalination, which seems to be one of the investments, particularly in the Middle East, that is getting a lot of attention. Is that something that is oversold in terms of the value of desalination?
I don't think that it's oversold. I think that it will be a necessary technology, particularly in areas like the MENA region. It is very expensive. And, this is a capital intensive business. And that capital intensity is going to require not just, private funding, but a lot of public funding and government support as well. But I think that there are cheaper technologies that we will deploy first here in the U.S. As opposed to other areas of the world where they don't really have those types of opportunities. Their baseline is very different than where we are here, at least today in the U.S.
Yeah, my take on desalination too is that the energy requirements are so great that we're also going to need to see either vast investment in renewables or nuclear fusion come online in order to provide the power necessary to do that.
Yes.
Okay. Now, let's turn to Middlesex Water Company. So in contrast to Watts, it's an operator of water utilities and mostly in New Jersey and Delaware. It's a 145-year-old company, and it looks pretty expensive at 49 times earnings after going up about 40% or 47% over the course of the last year in value. Why is now a good time to invest in a water utility management company like Middlesex?
Yeah, so the way that we look at Middlesex is they're kind of an anchor in any kind of water portfolio. We believe that they should continue to experience positive organic growth by investing in projects, products, and services that are really complementing their core water and wastewater businesses. So we do believe that they will be able to make additional prudent acquisitions as they have in the past. They've got incredibly strong regulatory relationships. They've got broadly diversified services portfolio. They have a very stable residential customer base today. And they also have 49 years of consecutive dividend increases. So I like to refer to them as, that's not bad, the stalwart in our water portfolio. So they have recently demonstrated really strong results, stable results, which is great. And, I think much of their business is highly protected. And with that being said, I think it's not going to be one of those companies that is a super innovator, but I think that they will continue to plug along, making acquisitions that are a nice complement to their business.
So the acquisitions is the question I wanted to ask. There are a lot of regulatory relationships built in a region in order to grow, within, say, for instance, New Jersey and Delaware. Can they grow rapidly if there's a lot of churn in this market? people are going to be looking to sell a lot of assets. People are going to be looking to buy a lot of assets. Will they be able to keep up with the rising cost of acquisitions and scale their operations effectively if they left their home region?
Yeah, so the two terms growing rapidly and regulation don't necessarily sync with one another. As I had referenced earlier on in the conversation, I think that regulators are going to take a new look at how we're doing things. And I think that, like so many other things associated with the water business, this is something that's going to change over the coming decade because it has to. I think that they are in a position where they can be a prime beneficiary of that. But I don't think that they're going to get off track from, having this very disciplined and prudent approach to making acquisitions that are a complement to their existing business.
So let's turn to somebody who's growing very rapidly, and that's Heritage Crystal Clean. They trade on the NASDAQ under HCCI, and they have been killing it, beating expectations this year by 20% every quarter, at more than 20% every quarter. And its earnings growth it's phenomenal, 925% year over year, granted from a low base. All of this with just a PE of 16, which makes it look like an undervalued gem. Why is Heritage Crystal Clean a good buy right now?
Yeah, I also think that it is undervalued right now. I think that their biggest risk is associated with competition, which we can talk a bit about. But I do believe that we're going to continue to see an expansion of their business. The backdrop is perfect for them, with more industrial companies more concerned than ever about their carbon footprint and environmental impact. And they are expanding in the Midwest and the West through organic growth at a rapid rate and through also acquisitions and partnerships, which is exciting. They've done a great job, even while expanding, in lowering expenses and using cash flows to retire debt. They currently have no long-term interest-bearing debt on their books right now. And so that's going to continue to put them in a position to expand rapidly. So, they operate in this highly fragmented businesses. And so their focus and the work that they do, I think, offers significant opportunities going forward. Just a word about competition. Their biggest competitor is Clean Harbor, CLH, or Safety Clean, which is trading at, I think, 35 times right now. So they are clearly, or CLH, which is a company that we also follow, is the leader in the space. I think that there's room for Heritage Crystal Clean to acquire business from CLH, and I think that there is room to hold both companies in your portfolio as well.
They're interesting because they are very diversified. They go out and they clean up contaminated water, but they also do things like antifreeze recycling. They have an oil industry services business that recycles oil and oil water mixtures. Does the fact that they're in the oil business affect Newday's assessment of the company's environmental impact?
Not so much, just because they are on the right side of the oil business, and organizations that are doing this work around worksite cleanup are going to be critically important. If you think about a corporate organization and their opportunities control headline risk associated with pollution and lax systems around cleanup, they're all thinking about doing things the right way, which they should be doing. And I think Heritage is going to continue to be a primary beneficiary of that mindset going forward with these big industrial companies.
Now, the company was upgraded by several analysts over the course of the last month, end of October and early November, and the share price jumped about 10%. But then it all fell back on the Omicron COVID correction the week of Thanksgiving. It sounds like this is a great time to really seriously look at this stock.
I do think it's a great time. And, I think for patient investors, I think that the company, the company's target should be somewhere around 45, given its valuation right now.
Okay. Well, let's close out on Waters Corporation. Now, that's on the New York Stock Exchange under the symbol WAT. it's a great contrast to finish on. It's a multinational. It operates in 35 companies. It's got a leadership position in water and water quality measurement. So they tell people whether the water's safe, not just make it safe. It's also going through a correction after losing a lot of momentum in recent years. Stock is off its highs by more than 20%. And it's trading at only about 30 times earnings, still expensive, but not very expensive, with less than half the valuation growth of the industry average. So it looks like a company with real potential, but is it struggling? What should investors be looking for as an indicator of success?
Yeah, I'm fascinated by this company. And you think about an organization by the name of Waters Corp. Waters Corp is called Waters Corp not because they operate in the waters business, but because their founder's last name was Waters. It's a very different company in a water portfolio in that they are actually a diagnostics and research company delivering specialty measurement solutions using ultra high performance liquid chromatography. Mm-hmm. So what does that have to do with water? So wastewater reuse is an essential component of the global water supply today. Water, of course, has to be clean and safe to use. Industrial growth, agricultural processes, even municipal waste all pose a threat to clean and safe drinking water, right? So there are increasing concerns about the treatment of wastewater, its cleanliness, and the presence of contaminants, including pharmaceuticals and antibiotics. In fact, I know that over the last year, there was some discussion around treatment of waste to identify, COVID-19 remnants. So, I don't like to think about like all of the things that are entering our water supply as it relates to things like COVID or pharmaceuticals and opioids and things like that. So this is where Waters Corp comes in. So chromatography separates the waste. And if we are going to be more dependent as a community on wastewater, given water scarcity, the core technology of Waters Corp is going to be highly attractive. So the company is offering a lot of really interesting technology associated with the identification of wastewater contaminants and the removal of those contaminants as well. So the company is off. I think that they are in the midst of a turnaround. They've got a new CEO at the helm who's committed to improving operations and reigniting growth. So the other attractive thing about the company is that about 55% of their business is actually recurring business. And they've built some really strong moats around their core technologies, which are going to be difficult for competitors to penetrate.
Now, thinking about the centralized nature of water measurement at this time, but projecting forward to that distributed water infrastructure we were discussing earlier, is there an opportunity for Waters to miniaturize and distribute its water measurement capabilities to support, for instance, tracking the reuse of water within the home, like from the sink to the toilet? Is there a bigger role for Waters as the provider of standard approaches to measuring water quality?
I think as a testing organization, yes, but as an organization separating out contaminants, I think that's going to be tough to do because this is very, very advanced technology. I do think, though, that the technology associated with filtering and things like that for home use are going to advance from where they are, but that's going to be pretty different than what Waters is pursuing today.
Now, I read in their sustainability report that they're pivoting to using renewable energy. Do you have insights into how much CO2 they're going to be reducing by transitioning water processing to renewable energy?
I don't have a lot of specific data around that, but what I will say is that they have a mindset at the organization to become, or not to become, but to operate as a sustainable organization. And I think that all organizations need to be behaving in a similar way. Their renewable energy usage is going to be really, really important, but not meaningful in the way as it would be with, a major manufacturing facility or energy company or somebody like that.
Okay, so they are demonstrating thoughtful approaches to how they do things, but that is not necessarily the spear tip of a transformation in the industry.
Yeah, certainly not for them as a life sciences company, but for every organization, if you think about the introduction of renewables through solar and things like that, it's going to be really important, and every little bit counts, right? So, if we could get every organization thinking that same way, it's going to be it will make a meaningful difference.
So, I wanted to ask just an impression that you might have about the fact. And this is the apocryphal story that Michael Burry, the trader who made the Big Short bet back in the early 2000s, is now investing heavily in water. Do you see the price of water skyrocketing over the course of the next decade or two?
That's a great question. It is a regulated industry. So there will be some caps on pricing. I think that as opposed to water prices skyrocketing, you're going to see massive changes in terms of how it's delivered, how it's measured and monitored and delivered. So I think that, here in California, as an example, energy use is cheaper at certain times of day than it is at other times of day. And I think it'll be a very similar circumstance associated with water usage. I think that there will be opportunities for home and local collection that haven't existed before. I think, of course, associated with that, you've got to make sure that water that is at least being used for human consumption needs is safe to drink, right? So I think that per our earlier discussion around different gradations of water, you're going to see big changes in that area as well. So where you're not spending the enormous amount of energy that is needed for full treatment facility to develop clean drinking water, but you're going to have different usage for different types of water going forward.
So the price may not, the end user's price may not change because of all the additional efficiency we create, but the per unit cost of the water may rise. And of course, the US pays a lot less than Europe and most of the world for its water. So we should expect some inflation, which is a new word for many of us in this generation. But it does sound like we have a viable path forward to continuing to provide clean water. It's just we still need to put a lot more money into that process.
Yeah, and I do think that prices will rise, but I don't see them, given that this is clearly a regulated environment, I don't see them skyrocketing. I think that they will skyrocket for people that are bad stewards of water. And so like if somebody isn't cleaning up their facilities in a way or using water prudently, then they're going to pay for excess water usage.
Well, and I think that really characterizes where we are, that we're on the verge of an era of efficiency and responsibility with regard to the environment. And once again, Newday is thinking about how to invest for that. And I want to thank you for taking the time. It's always a pleasure, Doug.
Thank you, Mitch. And this has been a really enjoyable conversation. And, water is life. And that's a quote from one of our really important partners, Georgie Bedell, that runs a water foundation. We're doing a lot in this area, not just with Georgie, but we do a lot of work with Philippe Cousteau and Earth911 International. So we are very excited to continue to delve into this topic and identify additional organizations that are innovators.
Well, I look forward to having you back in a couple of weeks to talk about the next subject.
Great. Thank you, Mitch.
We've been talking with Doug Heske. He's the CEO of Newday Impact Investing, and you can learn more about them at newdayimpact.com. And in fact, their freshwater portfolio is at newdayimpact.com/fresh-water. So do take a look at what Doug and his team are working on. Folks, take a few minutes every day to think about whether or not your money and your spending is supporting the environmental goals that you have. And we urge you to put your money to work for the things that are right for your priorities. And Newday, as well as the ideas that we share here, are all available to you. We hope that it helps. We're going to be back with another innovator interview soon. In the meantime, I'm Mitch Ratcliffe, your host. I always appreciate you spending time with us, and I hope you'll take a few minutes to share this podcast and all the rest of the Earth 911 podcasts and Earth 911 with your friends, your family, your pets. We urge you to have a very good green day. Take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. We'll be back soon.